and Mathew, and we are very happy to host both of you today on the series of Startup Istanbul event, which we have been doing for the last 3 months online. And we have lots of startups in June program from more than 25 countries and 15 different time zones. And it's very difficult to find the, perfect timing, of course. Today, we will host Mathew, and after his presentation, we will have also question and answer session. So, Bill, let me give you the word, and we will kick off this wonderful conversation with you, and then we will be back on question and answer session.
Sounds good. I think we're passing the baton to Mathew, but Mathew, you ready to go?
I'm ready, yes.
Awesome. Well, good. We'll reconnect after you're wrapped up and get some good audience questions as well.
Okay, thank you, everyone. Does someone else need to switch? There we go. Okay. All right. Well, hello and welcome, and thank you for having me and joining this session. I know I heard that you may be from 15 different time zones all around the world and not just in Turkey, which I think is really amazing and is a real credit to Barak and the whole Startup Istanbul team to have built something so global from Istanbul. So my talk is about global category creators in startups. So instead of just solving a problem with your software, your company, it's about creating a brand new category of product, which in my view is the best way to build a massive billion-dollar company. I'd like to tell you just a little bit about myself. I'm an angel investor who's based in San Francisco. I've been a full-time investor in venture capital since 2013. And I spent over 4 years as one of the partners at 500 Startups, one of the most active and most global seed stage investors in the world. Now I'm fortunate enough to just invest my own money myself. Before I became an investor, I helped start a business-to-business software company called Socrata that sold for $150 million. And when I started investing, the first investment I made with my personal money was another B2B SaaS company called Outreach that is worth over $1 billion now. And most importantly, I am a father of a 2-year-old daughter, and I will have actually a son in October, a second child, which I'm very excited about. So that's a little bit about me. And basically, one of the 2 points I wanted to make in this conversation, which is that geography in terms of startups is obsolete right now in 2020. Last year, I visited Istanbul and I talked a little bit about just global startups in general and how even last year, over the last 5 or so years, there's been this massive trend in new massive startups built outside of Silicon Valley. So you don't have to be in Silicon Valley anymore to build a world-changing company. And what's amazing is that, maybe in the 1960s and 70s and 80s and even 90s, startups really only existed in Silicon Valley. And then starting in the 2000s, you started to get these hubs of startups in other places in the world, in Europe or in Asia, that were building their companies in their own country. And what I noticed is that in the last 5 years or so, companies have really become global. They're no longer a Silicon Valley startup or a startup in Turkey or a startup in Indonesia or a startup in Kenya. Now startups are just global. They may have staff everywhere. One department might be in Silicon Valley, another department might be in the Ukraine. And this trend was already happening before this year. And of course, this year we had COVID-19, which changed everything, and is one of the reasons why you are all not in Istanbul itself right now, but all over the world. And you know what? It works. It's nice to get together in person, but it can be pretty convenient. We've found it's pretty convenient that you can build your company in your home country without having to travel. So COVID has really proven that this trend is here to stay. And even under the toughest circumstances that you can imagine, a global pandemic doesn't stop innovation and entrepreneurship globally around the world. And you don't have to be able to get on a plane and go to Silicon Valley. And frankly, you don't have to even be able to get on a plane and go to Istanbul. And still, this program is great, and you can build a world-changing company. But the problem is with all that competition is that any talented entrepreneur anywhere in the world can now compete with you and your idea. And any big company around the world, any big company based in San Francisco can compete with you and your company. And because it's, in my view, it's hard enough to build even a small company, that you might as well try to build a really big company and define a brand new category of software or service. And there's really no point in building the Me Too company just because there's competition everywhere, as I said. And one of the other things that I think is interesting is that it's gotten so hard, especially with consumer companies, to compete with big like Facebook and Google for customer acquisition. You have to pay them lots of money, that you really need to create something that you own your own category. There's a little bit, and I'll go into some other examples. Now, just to inspire you a little bit, here are 4 very large companies, only one of which I'm an investor in, unfortunately. Well, I guess I got lucky one time. They were all built over the last few years, maybe even the last 10 years, mostly outside of the US. Zoom obviously is something that everyone's talking about right now and has been spending a lot of time on this year in 2020 for obvious reasons. And Zoom's a company that many of us think about as a Silicon Valley company, but their entire engineering department is based in China. And the technology was always built in China. And and Zoom is interesting because it's not a China exclusive company. And because China is such a large market, many of the biggest companies in China mostly serve the Chinese market only and not the global market. But Zoom is different. Zoom was started in Silicon Valley, but with most of their operation in China. So it's truly a global company. And then Zendesk took a little bit of a different path. And basically what I'm trying to do here is give you some ideas of different ways that you can build your startup globally. There's not just one way to do it. Zendesk was started in Copenhagen in Denmark through the Series A stage. And after the Series A stage, then moved to Boston in the United States. And then after, I don't quite remember, maybe the Series B, moved out to San Francisco, and now their office is on Market Street in San Francisco next to Twitter and Uber. But at heart, a Danish company. UiPath, more recently, is just raising right now at a $10 billion valuation, and they're the original company that came up with this idea of robotic process automation in the enterprise. And UiPath is known as a Silicon Valley company, but was started and largely built in Romania. So you can build some of the largest startups in the world, the largest startups in history, from any country you're in. It doesn't have to be a big country. It doesn't have to be Silicon Valley. But generally, it's been important to engage with the Silicon Valley community and engage with the global startup community and build offices and build teams in the best place in the world, or where you have an advantage. So you might have some people in San Francisco, some people in New York, a lot of people in Romania. Now, I include Outreach here, another billion-dollar company. This is one that I'm an investor in, because Outreach took this path, but just within the United States. So this is another trend where Outreach was started in Seattle, but it's actually harder to raise money even in Seattle, where Microsoft and Amazon are, than it is in San Francisco and Silicon Valley. And so for a short period in the life of the company, the founder moved to Silicon Valley for 6 or 9 months to present the company as a Silicon Valley company to investors in Silicon Valley to raise his seed and Series A rounds of investment before going back to Seattle, where the rest of the business was. And at that time, then they also opened their non-engineering office in the state of Pennsylvania on the East Coast of the United States, because it was a better place to hire a lot of salespeople than Seattle or Silicon Valley, where it's too expensive. And so just like Zoom or Zendesk or UiPath was, taking the best of ecosystems, different ecosystems around the world and putting that all together into one company, Outreach has done the same just within the United States. So that's a way that you can build a company as well. And the other thing that's really interesting is that winners can really come from anywhere. And on the biggest stage, social networking, and I think that it's indicative that TikTok is and ByteDance, the company that owns TikTok, is the biggest new social platform, fastest growing, biggest threat to Facebook. And it's not a Silicon Valley company, it's a Chinese company, which is, I think, pretty amazing. And it didn't used to be true. And I think when this happened last year, it really changed the industry and really made people think differently. And so the point I'm making is even the next big SaaS company could come from Turkey or any of the other 15 time zones that you guys are building your company in. But the second point I want to make about this category that you need to build, and you need to carve out your own room in the conversation about startups and about business, your own story about a new customer problem that you're solving, is that big tech has just gotten really big. So since 2008 or 2009, that global financial crash, the global stock markets and the US stock markets have grown enormously. But what's interesting is the only growth has been in the big tech companies, Apple, Microsoft, Alphabet, Google, Amazon, and Facebook. If you take those companies out of the S&P 500, for example, the entire stock market has been flat for the last 12 years. And it's only these big tech companies that have just become massive. And so if you're not creating your own new category and just trying to compete with other competitors, building a commodity business and bidding against each other for Facebook ads or Google ads to try to put yourself in front of customers, then it's really hard to build a big sustainable business with a sustainable competitive advantage. And I think people don't always understand even quite how big the biggest global tech companies are. They're the biggest companies in the history of the world. They're worth over $1 trillion, some of them, the top 3 or 4, which is just mind-bending to me. And so it's the major takeaway for early stage entrepreneurs for me is that you really need to find a way to compete differently. And the way you compete differently is by playing your own game and not someone else's game. So if you are building a CRM, don't just build a CRM that's cheaper and worse than Salesforce. Come up with a new category. And here's just another statistic to illustrate my point. If you win your category, then it's 70 to 80% of all the market cap in your category goes to the winning company. So it tends not to be a very good strategy to be the 3rd or 4th or 5th best company in a category. And if you are building a company in your own category of software, then you might not be successful, but you are already the #1 company in your category. Whereas if you build a company in someone else's category, it's very difficult to be the best company. And it's amazing to me that there's really only room for 2 or 3 companies to be successful in any category of software product or service. And so there's a consulting firm here in Silicon Valley called, both the last slide and this slide are from this consulting firm called Play Bigger, that advises large companies around this concept of category creation, which they did not invent, but is an important concept. And they call it category design, and they call the winners in each category a category king. And so one of the points they like to make is that for early stage entrepreneurs, you are always focused on product design and building product, and you are always focused on company design, like hiring the right people. You need to sell the product and build the product. But what they encourage companies to do and entrepreneurs to do is think about how to design the category of software you're in. So there's some aspects of a category, like the principal one is really who the customers are and who are buying, who's buying the product, and how much you charge for the product. Is it a product that is cheap and has a lot of users, or is it a product that's expensive that needs to be sold through salespeople to larger companies for a lot of money? Is it a product that integrates with, a bunch of other adjacent competitors? At any rate, the idea is to think about the category, the market you're playing in, as well as your own product and your own company. So one good example, again, I'm going to come back to this company I know well since I'm an original investor, is Outreach. And one example that I think is pretty interesting is when Outreach started in 2014. It was a little bit unclear to see how you could build $1 billion business in the shadow of Salesforce. Outreach is sales enablement software. And the insight that Outreach developed was that they didn't build just a cheaper, easier CRM. And in fact, many companies had been trying to do that for many years. And it seems pretty obvious, but it's wrong to think that, oh, Salesforce is really expensive, and frankly, it's not that great, and it's clunky and has a lot of features that many people don't use. So why don't I just build something easy? And none of those companies have been very successful because just building a cheaper, easier version of Salesforce is playing Salesforce's game. It's not coming up with a new category, and it just hasn't been successful. But what Outreach thought was that Salesforce isn't really the tool where salespeople spend their whole day. Salesforce is the tool that salespeople use after they're done working to update their accounts. So it's almost like the time that salespeople are using Salesforce is time when they're not working, they're not doing their core job. And so Outreach set out to build the platform where salespeople would actually spend all their time when they were working and selling, as opposed to the time when they were updating their records and doing their accounts. And they came up with this whole term called sales enablement. And so today, most of their marketing is around the concept of sales enablement, and they promote their competitors, and they promote a lot of adjacent companies that may build competing products, because they think that establishing this category as a multi-billion-dollar category is going to create market pull. So customers think about sales enablement, and then when they think about sales enablement, then they will go to do their research and buy Outreach, which happens to be the best company because they established the category. And so I think it's a really great way of marketing and of building market pull. So customers are looking to find you rather than having to go out and find customers, which is really hard and really expensive these days in this day and age of marketing oligopoly between Facebook and Google. So Outreach is a unicorn. It's a they just announced they raised their Series F, I think yesterday or 2 days ago, at 1.3 billion. But what does this mean to a smaller company, like a seed stage company? So my most recent investment is a company that also starts out with O, and it's called Outline. And it's just a seed stage or even pre-seed company. And their insight was that customer success teams have been growing rapidly, but there's no real dedicated software for them to use. The notion of a customer success team as opposed to just customer support or product team is pretty new, but it's become very important in the world of software as a service and business software. And that's why the budgets are growing, the teams are growing across Silicon Valley and the world. And probably the leading company that is talking about customer success right now is a private unicorn company called Gainsight. And it's raised money at $1 billion. And Gainsight is a product that tries to create really heavyweight kind of enterprise dashboards around the health of one of your customers and the likelihood that they are to churn. So they collect data about how frequently the users at your customers are using your software, and if they're not using it very often, then it seems likely that they might stop paying for your software at some point. So that's the sort of insight, that's the sort of like enterprise dashboard that Gainsight is building, which isn't exactly, it's what executives who oversee customer success teams might look at every quarter or every month, but it's not what line employees in customer success use every day. So this is an example of category creation that is almost the same playbook, I hope, as outreach, but for a different department. Instead of for sales department, for customer support. And so Outline's idea is that they're not even trying to compete directly against Gainsight. They want to, work with Gainsight, work with other companies that are building customer support software, and kind of build this idea of a category that demands and requires first-class software, not general-purpose software like Google Spreadsheets, but its own customer success software. And Outline wants to be the platform where customer success people spend all their time doing their job. So it's very early days because it's just a seed stage company, but this is their idea for a new category, which I was persuaded enough by and thought the team was great enough to invest most recently. Another example of category creation, which I think is amazing, is there's this company called Vapor, which is a hardware company and software company that is building small data centers that attach to cellular antennas around the world and around cities, because they've noticed that with the expansion of LTE and now 5G, there's just this incredible explosion of demand for computing power at the edge of networks. So without having to, when you're watching a video on YouTube, without having to round trip all the way back to a Google data center on your phone, it's really helpful for bandwidth. But this is a brand new, this category of edge computing is a brand new category. They're not building data centers. They're not building a CDN necessarily, but it's kind of in between a content delivery network and a data center, because there's just this need for more and more computing closer to the user's end device, closer to someone's phone. And so, they've raised over $100 million. I don't know if it's $1 billion company yet, but I include this example because their CMO is a friend of mine, and I spent a lot of time talking to him about how his entire approach to marketing is building their own edge computing industry trade group and creating awards where executives at customer or potential customer companies win awards for being a pioneer in edge computing. And they've even created this kind of like Gartner style technology analyst practice that is independent from Vapor, but was started by Vapor to promote this category of edge computing where, they're building a product that is central to edge computing in general. So if edge computing as a concept really takes off, they think they're well positioned to be successful. But if the category takes off, it doesn't matter. It does not take off. It doesn't matter how good a job they're doing selling and building product. It won't be successful. And I think and I like this example because it's an extreme example for this notion that creating your own category is extremely important for any company, not only ones that are building something brand new that doesn't really exist yet. Another example that I use just because I spent some time leading marketing at was General Assembly sold for, or at least their online programs, sold for $400 million. And you may have heard about General Assembly as the first company to invent kind of the boot camp. And one point, the coding boot camp, and one point I wanted to make that's interesting is that the product that General Assembly was offering was at its core resources that were basically available for free on the internet, like principally Ruby on Rails tutorials, like how to build your first app in Ruby on Rails that are available as like nice free PDFs. And so they didn't even really have to build that much product, but they decided they had this idea to create a new category of a class and in-person instruction and online instruction, and instead of charging nothing or a small amount for it, they could charge, $18,000 per student for this product that otherwise in another form was really available for free on the internet, and could build a business that they could sell for $400 million, which I think is pretty amazing. And it's a little bit product positioning, like positioning this product as being worth $18,000. It's a little bit pricing, just charging $18,000 for it. And it's a little bit category creation, which is inventing this idea of a boot camp. Like instead of learning to code by yourself at home, you should take a structured class, or going to university for a lot of money, you should spend less money than a university in a shorter amount of time, but still pay a lot of money, still pay more than free, and learn with a few other people from a teacher. And so they were able to build a pretty big business there. And then Socrata, this is a company that I was one of the earliest employees at and helped launch. Basically, we built a product similar to Airtable, but back in 2007. And our original idea was to build a general purpose web spreadsheet and database product. And that product kind of failed because this was actually the time before even Google Spreadsheets existed. But there wasn't enough sort of market pull from the category. And what we found through some of our early users who were using the product the most heavily were in government. And then we came up with this category called a data publishing platform that we built into like a pretty good business, and to sell for in the area of 150 million in 2018, which was a software product sold almost exclusively to various governments, both different countries' governments and also within the United States at the federal level, and also at the state and city government level, for governments to publish data. And at that time, a lot of cities and countries, there were new laws and new initiatives that required them to publish various data about health or crime or housing or anything like that. And so we were able to build this kind of brand new category of product that created a pretty good business, whereas we failed at building just a general purpose web spreadsheet, which was a category that already existed and people were trying to build. And in fact, if we had made more progress on that, we definitely would have been failed even worse when Google Spreadsheets came out. So I'm jumping around a little bit now to a couple of other companies that I know well that are just really global. And Shyft is this company that's a platform for corporate relocation, for moving, for physical moves. And what's interesting is that they're headquartered in San Francisco. They've always been global. Almost all their employees are in Serbia. So not even a traditional hotspot of, say, outsourcing engineering. And it's not even just engineering in Serbia. It's a lot of the non-engineering people. And the founder is incredibly resourceful to like just find this hub nearby to Turkey, actually. where there were a lot of people who were really smart and energetic and hungry and wanted to help build a big company. And he's even bought like a large building there where they could all work out a whole campus. And one of the lead investors is in Miami, not in Silicon Valley. And the CEO actually flies Turkish Airlines, I mean, not since COVID, but before that for years, from San Francisco to Serbia every month. And that's how he's building a global company that is a top tier company. And then the last slide of examples that I have is it's not just company building, it's also for investors. And there's a fund I know here based in Silicon Valley called the AI Fund, and it's led by one of the two most famous AI professors at Stanford. And it's at least the first fund was 100 million. I think they have a larger fund now. And the AI Fund not only invests in companies, but creates their own companies based on their own research. And even for such a well-connected VC fund in Silicon Valley, they realized that at seed stage, because there's such high demand for machine learning engineers in Silicon Valley from Google and Facebook and every other large company, that a lot of these individual contributor engineers are able to command salaries of $500,000 or crazy things like this, sometimes more. And as a seed stage startup, which were the kinds of startups that they're building, you just can't afford that. It's not worth it. It's not worth spending your investment dollars on salaries that high. And in fact, they had a hard time even finding, because machine learning engineering is pretty niche specialty where there isn't a large supply of machine learning engineers today around the world, not enough, that not only could they not just go somewhere else to build the companies, they had to find actually a good computer science university. And in this case, they found one in Colombia in South America. And they established this kind of postgraduate master's program in campus to take computer science graduates from that Colombian university and train them in machine learning to stay and live in Colombia and, build these companies with them. All because the demand, it was too expensive to hire machine learning engineers in Silicon Valley, and they found that to build the best new generation of AI companies, they needed to go find this university in Colombia and even train their own engineers. This didn't used to be true. And the other kind of points that I wanted to make were just that like my example with TikTok and ByteDance, that the biggest companies in the world are not always built in Silicon Valley anymore. And in fact, starting in 2018 and probably continuing today, there's more unicorn billion-dollar companies outside the USA than inside. The US is still like the single largest component, but the rest of the world combined has more unicorn companies than Silicon Valley and the US. And through programs like Startup Istanbul, you all in any country around the world, in any time zone around the world, you can learn about the tricks and knowledge that generations of companies have developed in Silicon Valley without actually moving here. And so you can build companies that are globally competitive with Silicon Valley companies through this knowledge that you get through programs like Startup Istanbul without moving here. And also technology has just merged with the rest of the economy, so that every company in every category now, every new company is really a technology company. Taxi companies are now technology companies. Hotel or vacation rental companies like Airbnb are now technology companies. Food delivery companies are now technology companies, not just bicycle messengers. Almost every company is technology now, and you can build those in any country. Every country needs its own. And, no one wants to, these days, because there's so much more information available, I think entrepreneurs have gotten more ambitious and investors have gotten more ambitious that they want to build truly global companies, even if they're not based in Silicon Valley, not just the best company in their country. And so what we see today is that any country can create a category king, which didn't used to be true. And there's some trends and drivers here, like, at least until 2020, budget airlines were a big driver. It was much easier to fly anywhere for a short amount of time. There has been a lot more offshoring, so people work for global companies. They could have worked in the Google office in Nairobi and then just started a company in Nairobi. That offshoring is happening all around the world. And now, especially in this time of COVID and remote working, then every company has become a remote workforce. And when that's true, then everyone realizes that you can build a massive company without being in any one particular location. So I think that one of the things that just the last sort of piece of recommendation that I'd like to make is that, I'd encourage you to think about what you can do to create position your company to be a global winner, not just the best company in your country. And to do that, you really need to educate yourself about like what the best companies are doing in Silicon Valley principally, but also the best companies around the world, and really have a story and a clear idea in your mind about, why what you're doing, your strategy is better and going to work out better than they are, and how you're going to be the best company, and how you're going to be the category creator. And some of these ideas I talked about in terms of creating your category is that what's different now is you're deciding what kind of customers you want. That's designing your category, designing your market, what kind of prices you want them to pay you, and then build your product and your company around that and your sales model. And also, there's this amazing trend of working with your competitors. This is especially true in SaaS, because most customers use a lot of this different business software. And if you integrate well with a bunch of other adjacent companies and maybe even future competitors, then you have the potential to create the central core piece of software that your customers will need. And then, because big tech is just so powerful now, per my earlier slides, you really need to find your own strategy in your own category to compete, to win your own category, and not just try to compete with other companies and buying ads on Facebook and Google. It's not a strategy that works, because there's so much competition now. So you really have to do your own thing. And entrepreneurs do their own thing anyways. And so fortunately, it's easy advice to give, but it's critically important. And basically what you're trying to do is invent a new type of product and customer need. And so that's my whole presentation, and I'm happy to take questions and have more of a conversation. I'd love to hear about some of your companies and how you think about your categories as well. Bill?
Yeah, hey, Matthew, that was fantastic, really good. So we do have some questions that are coming in. I'd encourage others to continue to put up their questions, but let's start with maybe looking at which categories of companies you're particularly interested in. Obviously, you've shared a bunch of tech companies, but are there particular tech verticals that are most interesting for you right now?
Yeah, so in my investing, I invest about 75% in B2B SaaS, because that's the category that I feel like I know, and that's the category I have some special insight and some network into. And so I see some world-class deals. And then the other 25% of my investment, or it could be like an 80-20 rule, because everything in life is an 80-20 rule, where I invest about 20% or 25% in just people and ideas that I think are completely amazing and could be like truly massive. So, I have one crypto investment, I have one biotech investment, I've done a consumer investment in the aging population of the world, because that's one mega trend that the world is getting older and older on average. Yet, services haven't kept up. And obviously there's, the potential for world-changing companies to be built in biotech. And that's especially obvious today in this day and age of pandemics. And again, I think just the last thing, world-changing companies are truly built mostly by world-changing entrepreneurs. So it's really for me, the people that are the most important.
Sure. No, that makes sense. And so Mohammed, who asked the first question, actually has, it was a 3-part question, so excuse me. I'm guessing Mohammed is somewhere in the med tech or medical space. So he went on to ask if you have some thoughts about medical tourism and the digital health market. And I guess I would, as you think about that, sort of think about it in the context of COVID. Obviously, medical tourism probably a little challenged, but are there some post-COVID thoughts as well, whether it's with medical tourism or digital health tech in terms of what you might see or what might be interesting?
Sure. Yeah, I have a few thoughts on that. First, on medical tourism, I think it's pretty clear to a lot of entrepreneurs and investors and just sort of analysts that medical tourism is a massive and growing trend in the world. I think it's still unclear, and I've seen multiple companies over the last few years building kind of like a platform for medical tourism. It's still pretty unclear how you build a big business and a large trusted global brand in that space. Potentially, if you live in one country where the trend is the strongest, then probably the right way to do it is to build a very strong but narrow niche in your own country of a pipeline of medical tourism. I'm not an expert, but maybe it's flying to South Korea for cosmetic surgery or something like that, or Brazil, where those are 2 leading countries in cosmetic surgery I know, and really catering specifically to the narrow set of customers that are most likely to do that today. Probably at some time in the far future, then everyone will do it. But today, I just think it's hard to time the market on medical tourism. And if you just throw up a marketplace for medical tourism in 2020 or even 2021, it's hard to be successful. Digital health, particularly in the United States, I think what's most interesting, especially from this category design perspective, is that you really need to think about where like the market power and the leverage you're going to have in the health ecosystem and who you're going to sell to. And for example, in the United States, it's very difficult as a software provider to have any leverage at all. Because there's a few big software providers that sell to all the hospitals, and their products are terrible, and no one really cares because that's not really how the health system is set up. And so if you're just sort of building a better mousetrap, a better product, that's not a real recipe for success. And there haven't really been too many examples of companies that were too successful. I think that some of the companies in digital health that have probably so far been the most successful have taken this narrow idea of trying to provide a product that might be in person and outside the insurance system in the United States, like therapy, and just doing it online, or even maybe taking a category of service that's not medical, like meditation, and kind of like wrapping it in an app that seems more medicalized to get more people using something that otherwise they would have gone to the doctor for, but again is outside at least the US healthcare system, and that's probably also true of, say, any sort of large institutional health system like in the UK, for example. Those are my general thoughts on digital health.
Cool. No, that's great. And so Mohammed's third question is related to when you invest in a company, I guess the sense would be that you're more of a strategic investor besides your capital. Are there other ways that you support the companies that you invest in? How else are you active with the company?
Yeah, sure. So because I'm an angel investor, I'm often the earliest investor, and I like to be the earliest investor in companies. And so there's a few ways that I help, and it sounds really basic, but it's important. One is by, often writing the first check or the second check into a company. If you're one of the people who believes in an entrepreneur before anyone else does, that's important. because I've had success investing in the past and have a strong network, when I invest in a company, then there's a range of downstream larger investors who will take a more serious look at your company because I've invested in it. Let's see. I can help sometimes with hiring some initial execs through the network that I built up over my career of 20 years or so. Those are the ways. But I think, mostly what entrepreneurs appreciate the most is just having someone really believe in them before you have traction, before you have much of a company there. And that's the true role of an angel investor in my view. And especially if you're outside Silicon Valley in the US, that's in short supply, where most investors outside Silicon Valley come from more of a financial banking or consulting background, and they're very focused on the spreadsheets and your business metrics. But early stage companies, usually don't have numbers that are very useful at all. And even if you do, they're not usually going to be very relevant to the ultimate potential of your business in the future. And so that's where, people like me, I think, are helpful, because we are willing to write checks because we really believe in a person and an idea.
Perfect. Cool. So it looks like we have a couple more questions, and certainly feel free, folks, to submit some more. So the next question is from Zoria, and it is, what's the use of becoming a category king? While the purpose is not to homogenize and become the sole player in a category. So I guess the balance between not being out on an island, but also being the dominant player. How do you sort of rationalize that balance between category king and sort of being out in an empty space?
Yeah, well, I think the idea is that if you're trying to build a truly large and important business, you have to play your own game and build your own category. You can successfully build a relatively smaller business, I believe, without really defining the rules of the game yourself. But, like I said at the beginning, in my experience, it's as hard, if not harder, to build a small business than build a big business. So you might as well build a big business. I'd say one example is you look at all these scooter companies around the world, and they're by and large undifferentiated. And it's unclear whether even one of those scooter companies will ultimately be very successful. But what is certainly true is that the small Me Too local scooter companies have really no enterprise value at all, and they'll run out of money and get bought by like a Bird or some well-capitalized company for nothing, which maybe the founders will make a few $1 million or something, which could be life-changing money to a lot of people. But there's there's in no way is a company like Cirque, for example, that Bird just bought and then shut down, going to be because of COVID, like a really large company. So I think that's the best like canonical example of like companies that are truly undifferentiated, and why it's good to have sort of your own strategy and build your own category.
So to follow that up, and this is my own question, and I think this may also be a place where it may confuse people a little bit, is and maybe if you could take a second and just describe the difference between the first entrant or an early entrant into a category versus the category king. In other words, Apple didn't invent the MP3 player. In fact, there were lots of MP3 players out there before the iPod. And other, actually similar technologies, but maybe you could sort of differentiate between sort of first entrant and category king.
Sure. Yeah. I don't think that first entrant necessarily matters at all. Like sometimes it does, but for example, in the sales enablement space, in the example of Outreach, there were 3 companies all at the same time, and there was a company called Tout App. There was a company called Yesware, and there was Outreach. And I think both Tout and Yesware were companies that were built first and kind of had the first idea of this kind of like email semi-automation for salespeople. But really the way Outreach was able to win was focus on moving up market faster and selling, like making bigger sales to bigger customers, and also just relentlessly expanding the product and just building more features faster over a period of years, like really committing to building the biggest and best product in the space. And that, like, having that kind of like speed and pace and product leadership compounded over a number of years. And I know that it sounds easy, like which company wouldn't want to have product leadership? It sounds easy to say that every company would want to, but it's not always true that every company has it. And so that, I mean, that's what I saw in that space in terms of really owning a category. So it doesn't have to be the first. In the scooter example, you know, some companies are better capitalized. Or in the ride sharing example, you know, there was an app called Flywheel in San Francisco that invented the idea before Lyft and before Uber. And in fact, I think the founder has sued Uber, or has some long-running, years-long lawsuit that they stole his idea. But you know, the companies that execute the most aggressively and are the best capitalized are the ones that, you know, ultimately own a category.
Cool. Oh, that's great. So the next is from Tariq, and the question is, what are your thoughts about? Oh, sorry, we just slid up. About the tech development in the education sector, so ed tech and that space. What are your thoughts about developments you see there?
Sure. Yeah. So I actually spent a lot of my career as an operator in ed tech, and so I have some thoughts there. I think at least in there's a couple different dimensions and this goes to category creation, how you think about category design. I think it's very important, just like healthcare, to think about who you're selling to. So, for example, the companies that have become really big in ed tech have tended to be outside the U.S. And outside a traditional formal system of schooling, because it's hard to build enough like market power and leverage if you are, say, selling software to K-12 schools in the United States. Even though, as an entrepreneur, if you look at the size of the market and the total aggregate spending on, say, you know, K-12 spending in the U.S., it's massive. It's like, you know, trillions of dollars. But there's something about that market and those customers that make it difficult to build a really big business and consolidate power. But if you are opening a string of like professional schools in India, or even, you know, frankly, like General Assembly boot camps and coding boot camps in the US and around the world, you know, that's a good way to build a massive company, or a massive test prep company in Korea that, you know, makes superstars out of their teachers who fill stadiums. Like that kind of company has become really, really big. So generally, my feeling is to stay out of the U.S. and out of any sort of like regulation in ed tech, even though the sort of existing institutional spending is massive and attractive to a lot of entrepreneurs.
Cool. Oh, that's helpful. So the next is from Social. What are the implications on customer development and finding product market fit when you are creating a new market category for a B2B pre-employment assessment company? So I guess the idea, you know, sort of how do we balance our time in customer development and finding product market fit in a new category?
Yeah, I think that's a great question, because at least from my experience as an operator, I think those two things are really the same, where, you know, when you want to build a new category, you need to have an insight and, you know, get some feedback from customers that there's this hole in the market, this product should exist, or this category of products exists. And so to get really tactical and nitty gritty about it, when you are interviewing customers and talking about like, you know, the problems they have that you might fill with your software, you know, I'd be thinking about asking some questions about like, how customers might articulate a whole category of software that doesn't exist, like the words they might use, the messaging that you might use, that like in the mind of a customer categorizes, some new software that doesn't exist that you might be building. That's what I think. And if you are selling into HR, which it sounds like you are, you can say, like, how would you categorize this company? In fact, that's one of the principal goals of customer development, is to figure out a way to learn the right way to categorize your own software and your own product before your customer does. Because if you don't put a category label on your software, then the customers will, and investors will, because customers will be just thinking like, what kind of other software, what do I use today to do this? Like, what is like a similar kind of software that I could be comparing this against, comparing it versus nothing? Like, do I have an idea that I need a specific pre-employment assessment product, or is that not even a category that I think about yet? Those are all things that are classic customer development. So I really think it's exactly the same. And maybe if you're doing the interviews, the customer development interviews, I would have more interesting conversations and spend more time on how customers consider like a particular category of software or product.
That makes perfect sense. And yeah, no, that's great. I think Elif is joining us. Elif, where it looks like we're getting to the end of the hour, and Mathew has done a phenomenal job here. So please hop in.
Yeah, actually, I just wanted to thank you both for this valuable 1 hour. I think we are done with the questions as well. It's been a great presentation. Mathew, thank you very much for being with us, and Bill, you too as well. We hope to see you in next Startup Istanbul events or webinar series. I wish you all happy, have a nice day.
Great. Thank you very much, and good luck building massive billion-dollar companies, all of you around the world. I really appreciate your time. Thank you.
Thanks, everybody. Thanks, Elif.
Thank you. Bye-bye.